Here we go. Hey, welcome back. Thanks for starting the beginning of your day with us here, the intersection of conservative ideas and reality. I've got these stories here that are quite fascinating to me. Nobody talks about the national debt anymore or the deficit. Here's the Wall Street Journal headline. Government bond market measure says recession risk growing. Yield on short-term treasuries has been higher than on long-term notes for more than 30 consecutive trading sessions. Also from thehill.com. Make America's deficits great again is the headline there. So there's some media attention being paid to, the first, the first term of President Trump and, spending the debt, that sort of thing. Also, we have from rollcall.com headline Pelosi debt limit vote possible before August recess, kind of raising the debt limit again. So nobody really talks about these issues anymore. I'd like to bring in an expert. You've heard him before. It's always great to talk to him. His name is Dr. Michael Busler. He's a professor of finance at Stockton University in New Jersey, a public policy analyst, economics expert. You've seen his column featured at Newsmax, LifeZed, and townhall.com. Dr. Busler, welcome back, sir.
Good morning, Paul. How are you? It's always my pleasure to be here.
I appreciate that. It's likewise. So what do you make of these headlines?
Well, so here's the situation, and it's going to come to a head, I have a feeling, in September. So the federal government every year spends more money than they take in revenue. And they've done that in, I think, 56 of the last 60 years. So when that occurs, they have to sell bonds to finance the deficit, what they're short. There's no mechanism to ever pay back those bonds. In other words, we pay interest only on them. When they come due in 20 years, we don't have the money to pay them back, so we simply sell new bonds to pay back the old bonds. So it's called rolling over the public debt. So as a result, the public debt keeps growing. Congress has to set a limit to how much the federal government can borrow. The limit is roughly in the $22 trillion range. But we because of the continuing deficits we've had and we're having right now, we're up to the maximum. So Congress has to approve an increase in the debt ceiling. Now, in order to do that, conservatives are going to say, look, we'll go along with you, but you've got to put a plan in place to get these deficits down and at least come closer to balancing the budget. Well, there's going to be arguments with that, too. Reducing government spending is very difficult. Why? About 70% of the government budget, or roughly a little over 60%, rather, of the government budget, $2.7 trillion of the $4.4 trillion, a little over 60%, goes to things, entitlement programs, Social Security, Medicare, Medicaid. Politically, we're going to have a difficult time trying to reduce any spending there. So that's pretty much locked in. Another 8% or so, 9%, goes to cover interest on the public debt, which we obviously have to pay that also. So that's 70% of the budget that we can't touch. That leaves 30% left. Now, of that 30%, roughly, half of it is for defense spending and half of it is for domestic programs. The Republicans want to reduce the spending on domestic programs and increase defense spending because our military has been essentially decimated prior to President Trump. The Democrats, on the other hand, say we spend too much money on the military. They want to increase spending on social programs. And some of the Democrats want to vastly increase spending on social programs when they talk about things like Medicare for all, free college tuition, and that sort of thing. So here we're going to have a big problem, I think, in September. We have to raise the debt ceiling, and we have to come up with a deal to do that both the Democrats and Republicans can live with, and it's going to be a very difficult thing to do.
Absolutely. Absolutely it is. And I guess I'm just wondering, what is your view on the national debt, the deficit, in terms of, how long can we do this? Somebody was telling me, or I was reading a Facebook post about Ross Perot. He passed away. And somebody said, I voted for Ross Perot because he was talking about the national debt. And he was letting everybody know. And he said, back then it was $4 trillion, now it's $22 trillion. And so, nothing bad has happened really since, I mean, we have this massive national debt, but there's nothing bad that's really happened to us yet.
Yeah, so those who would go along with that argument would say, well, look, the public debt has gone up 5 times since Ross Perot. It's 5 times larger, more than 5 times larger. And look, interest rates are low. We don't seem to be having any problems. So what's the big deal? Just keep letting the debt go up. Here's the big deal. You measure debt relative to how much income you have. And we do that for individuals, too. You have a certain level of income, you can take out a certain level of mortgage. You want debt that's proportionate to your income. Well, right now, back when Ross Perot said that, the public debt was only about 50% of annual income. The public debt now is over 100% of annual income. So now the debt is getting to be large. The interest expense alone is eating up 8, 9, almost 10% of our annual spending. And interest rates are very low. Eventually, interest rates are going to go up. They have gone up somewhat. They're probably going to stabilize, maybe drop a little bit this year. But eventually, they're going to go up, and that will mean the interest expense on that debt will be even higher. Once you get to be more than 100% of income, it starts to make people nervous because you can run into some difficulties in being able to sell bonds, difficulties in being able to keep interest rates low, and difficulties because you're having to spend so much of the budget to pay just for interest on the debt. So we're pretty much close to a breaking point. There's only one other time in history where the debt was more than 100% of annual income, and that was right after World War II. Now, after World War II, of course, government spending went way down. The war was over, and we were able to get the public debt to be a much smaller portion of annual income. But we're at a point now, we're pretty much at a tipping point. We can't let the debt get much higher, and we're looking at relatively large deficits that looks like well into the future. So we're going to have to deal with this soon.
We're talking with Dr. Michael Busler. It's always great to have him on the program. Let me ask you about the Fed and this pick. Trump has nominated Judy Shelton, and she supports going back to the gold standard. Now, I think she's obviously a minority when it comes to these, these governors on the Fed. But what are your thoughts on that?
Yeah, I don't think going back to the gold standard is a good idea. It will end up pegging exchange rates between countries, and that's going to end up, I think, causing more problems than it solves. We're better off letting the exchange rates float and stay off of the gold standard. Now, about the Federal Reserve, though, and I wrote about this last year, I think the Federal Reserve was way too aggressive in raising interest rates. Since President Trump was elected, they've raised interest rates 8 times. Now, granted, they were pretty close to zero, and they're still relatively low. They're only in the 2.5% range. We're looking at the federal funds rate as a gauge. So they're still relatively low, but it's gone up so fast that it's interest expense for businesses that's twice what it was last year. Well, that tends to slow economic growth. The other thing the Federal Reserve is doing to get out of the last recession, they went through what they call this quantitative easing, which means they vastly increased the money supply. They're now starting to reduce the money supply, and they're doing it relatively quickly. That, too, will tend to slow economic growth. So I think what Chairman Powell said just yesterday was, we're going to take it easy with this. We realize, I think we got very aggressive. We're not raising interest rates at all this year, and most likely will reduce interest rates probably when they meet at the end of the month. I expect about 0.25%, maybe even 0.5% drop in interest rates. That'll send the economy back on a growth path that we were on prior to the Federal Reserve taking all this aggressive action. Remember, prior to Trump getting into office, the economy was growing at only about a 2% rate or less. since President Trump has been in office, the economy has been growing at a 3% rate. Had the Federal Reserve not been so aggressive last year, we might be growing at a 3.5% or 4% rate. So I think the Fed's going to finally ease up on some of their aggressive posture.
We certainly know Donald Trump's political opponents are hoping for an economic collapse so that they can blame it on him. We definitely know that. We're talking with Dr. Michael Busler. I want to ask you again. So, ask you about the Fed, ask you about the gold standard. Last week, Trump talked about the U.S. dollar and maybe weakening the U.S. dollar. I've got a story from yesterday from CNBC. Trump has reportedly asked aides to find a way to weaken the U.S. dollar, basically play some of this currency manipulation game that other countries are doing. What are your thoughts on that? I mean, I will say this about Trump. He comes up with ideas that you don't even ever hear talked about. You know, at least he's thinking outside the box. Go ahead.
Yeah, that's exactly. He's exactly right. He's not a politician. He's a business person, and business people look for solutions to problems and don't worry about things necessarily being politically correct or not. Which is why Trump is looking at doing so many things. The way that exchange rates are supposed to work, you just let the market determine what exchange rates are, and they work out well. China purposely keeps the value of their currency low, and they can manipulate in certain ways to be able to do that. That makes their goods much cheaper for everybody else to buy, and our goods more expensive for them to buy, which is part of the reason why we have such a large negative balance of trade with them. Had China not done that, the exchange rates would have worked themselves out, and the trade deficit we have with China would not be as great. So Trump's saying, well, if they do it, maybe we should do it too. There are not really too many ways we can do that that will give us a lot of benefit. So I don't think this will go anywhere, but you're right in that Trump is bringing up different ideas and different ways to do things, saying, look, we've got to combat some of these things, and we have to combat them any way that we can.
Last question on the bond issue. I did read this headline here, Wall Street Journal. Government bond market measure says recession risk growing. That's by Daniel Kruger. What are your thoughts on that?
So normally, long-term interest rates are higher than short-term interest rates. In other words, if you buy a 10-year bond, you should get a higher interest rate than if you buy a one-year bond. And the reason is simple. The longer you have the money tied up, the more risk you're taking. And the more risk you're taking, you should get a greater return, so higher interest rates. So long-term rates should be higher than short-term rates. And that's called looking at what they call the yield curve. Now we have an inverted yield curve, which means the short-term rates are actually higher than the long-term rates. About two-thirds of the time that has happened in the past, a recession follows. Now, not always, but about two-thirds of the time. So many of these economists and financial people are saying, well, look, the bond market's telling us a recession could be coming, and that's where they're reaching those conclusions. I don't see a recession coming. If short-term rates are higher than long-term rates, the simple solution is for the Federal Reserve to cut interest rates so short-term rates will go down, and then we'll have a normal yield curve. Wow. And I think that's what's going to happen, and I don't see a recession anytime soon.
Yeah, you know, I mean, everything, it's unfortunate. It makes me uncomfortable, but, you know, it seems like everything kind of hinges on what the Fed does. And, you know, we have people, a part of the status quo, I would say, that like to claim that what the Fed does is above politics, but I don't believe that. I mean, I think any organization can be political, especially if you've got the power. Of course, you're going to be influenced by politics, right, Michael?
Yeah, it's not supposed to be. In theory, the Federal Reserve operates independently of the federal government. They don't have to do what the president says. They don't have to do what Congress says. Your point, in reality, the president appoints and reappoints the people on the chair and the other people on the Federal Reserve. So even though they want to operate independently, they still have to, in the back of their mind, say, look, if we get the president upset and we don't do what he wants and the country ends up going into a bad economic position, I'm not going to get reappointed as chairperson next year, at the end of 4 years, rather, and I'd like to do that. Also, the president uses a technique economists call jawboning. And jawboning means you just kind of keep talking like this and putting pressure, and maybe it will have some effect. Look, President Trump talked about lowering interest rates 6-8 months ago. The Federal Reserve was in the process of continuing to raise interest rates. So now the Federal Reserve has changed. Well, is it due to President Trump putting a little pressure on them, or is it more due to some of the weak economic numbers we've seen in the second quarter? I would suspect it's a little bit of both.
Dr. Michael Busler, we always appreciate it, sir. Thank you so much for being with us.
Thank you, Paul. My pleasure.
All righty. Have a great day. Folks, we're going to take a break and